Welcome back to CEO.CA. Michael Hubbard joins us on this segment. Now, Michael is a relatively new addition to the Sol Strategies team, but he brings a deep level of experience with Lane, where he was instrumental in building Validator assets. Now, Sol Strategies acquired Lane's Validator in March, and we'll learn together what all of this means from someone who can have or give us a rather unique perspective. Someone who's built and is building Validator infrastructure from the ground up and is now helping to scale it at the institutional level. So Michael, welcome to the show. Like I mentioned, it'd be very useful for us if we can learn directly from you what validators are and what Solana staking is. Take it away.
Absolutely. So Solana is a blockchain. So the blockchain most people are familiar with to begin with is Bitcoin, right? So what a blockchain is it's a network of computers spread all over the world. And those computers on Solana are called validators. And how it works is essentially that a validator is a very, very powerful computer, a server that sits in a data center with an extremely fast internet connection and a very powerful CPU. And we have this network around the world right now of about 1,400 validators on Solana that are processing transactions. And whenever you send a transaction on Solana, which means you could be sending your friend 10 USDC, you could be buying a meme coin, like the Trump coin or one of these meme coins that exist. Whenever you perform one of these transactions, that transaction goes to a validator that processes it, meaning they check that you have all the requisite balances, you're authorized to transact on that account, all of these things, and they distribute it within itself. And all validators around the world have to come to what we call consensus on whether a transaction is valid. That's how a blockchain works, essentially, is that all the validators have to look at a transaction and come to an agreement that it is valid. And only when a certain threshold is reached is a transaction considered final and added into kind of this permanent, irreversible ledger, which we call the blockchain. So with staking, you can lock up your Sol tokens with a validator of your choice. You can withdraw them at any point with a 2-day notice. But while those tokens are staked, you're essentially saying, this validator that I've chosen, I trust them to secure the network, and I convey to them the voting power of my tokens. And validators essentially are measured by how much stake they have. So the aggregate of all the Sol tokens by all the users delegated to them relative to each other. So a validator with 1 million Sol in stake might have 1% of all of the stake in the network, which means they get to have 1% participation in the consensus. So their vote on whether a transaction is valid counts for 1%. And then for the staker, they earn staking rewards. So the network rewards them for securing the network by locking up their tokens, which is in the range of 7 to 9% at the moment. The staking ecosystem as a whole has been evolving in recent years, where we're seeing a transition from very static native staking towards more liquidity, more users that are leaning into liquid staking tokens, and more ways that stake accounts are becoming composable in decentralized finance protocols as well, which is really making staking a lot more attractive because you're able to keep staking while also accessing other benefits on the blockchain.
So, I mean, it's safe to say that Sol Strategies benefits directly from rising trading volume in Solana.
Absolutely. So as a validator, we have essentially 3 revenue streams, and one of those is essentially transaction fees. So the more people that are trading or just using the blockchain in any form, this includes RWA protocols like Helium or Hive Mapper, where you have mapping or global mapping of the world, or mobile networks that run on Solana, payment protocols, USDC growth. All of these directly translate to increased revenue for validator operators.
Well, when Sol Strategies made the acquisition of Lane, plus I think a few more validators, it made it clear that the strategy is growth by acquisition, right? The more validators that Sol has, the bigger and faster it can grow. Will that sort of strategy continue on for the next near term?
I think we're at the moment in a inflection point where we are understanding how we have gotten to the point as a company where we are today. The company originally was known as Cypherpunk Holdings and went public in 2018 and was already back then a blockchain-focused business, focused especially on the ability of blockchain to enable self-sovereignty, privacy, global access. And a year ago, the company pivoted to focusing on Solana specifically as the blockchain that is best poised to unlock all of these benefits for the global population. Now, from that pivot, the Validator acquisitions were critical to establishing the company's kind of focus on the infrastructure side on the blockchain. So really wanting to help drive forward and advance this technology by supporting the foundation layer, which is the infrastructure. And we've gotten to a point now where we have 3.7 million sols staked to us and are operating 4 in-house validators. At this point, we're focusing more on ways to grow that operation and improve our technical capabilities. We have at the moment a globally distributed engineering team that is attending to our infrastructure with servers just all over the world, really. So acquisitions have been critical in getting us to this point, and we can never rule out any future acquisitions, but I don't think we're looking at it as the only source of growth in the future.
Okay. Well, as CSO, Chief Strategy Officer, you're tasked with kind of growing and building high-value partnerships. Mm-hmm. Can you tell us what types of partnerships you're prioritizing at this point, given what you just mentioned about wanting to improve the tech that you've got so far?
Absolutely. So a big part of the business, the foundation originally was the treasury strategy, where we buy and hold SOL in our own treasury. Currently hold about 420,000 SOL, which we stake to our own validators. The second foundation pillar is the validator operations. So through our validator operations, we also generate significant revenue for the business and participate in the foundation of the network's operations. Where we're now looking to grow is how do we engage more with the broader ecosystem and connect traditional capital markets to the on-chain markets that are forming and becoming more and more relevant and competing with Wall Street. So, with that, we've been pursuing tokenization, and what that means is essentially allowing our stock to trade on the Solana blockchain. Currently, we trade in Canada on the CSE. We recently filed our 40F with the SEC in the US to pursue listing on the NASDAQ as well. And then soon, we'll hopefully be able to trade our stock on the Solana blockchain, enabling those 3 distinct venues and the liquidity of each of those venues to bridge over to each other. And if I can just add on the tokenization front, what's really exciting here is that what we're pursuing is not a synthetic token that represents a stock or a wrapper or a third-party custodied kind of representation, but a true, genuine common share that is a token on the blockchain, which gives you all the voting rights, participation rights, access to corporate actions, as if you held that stock in your brokerage account anywhere else in the world.
Now, how do you see institutional adoption of blockchain staking evolving from here on out?
It's absolutely a growing narrative, and we've seen this with ETFs as well, where we started with spot ETFs, and we're now seeing a move towards staking ETFs, and we see a formation of staking ETFs that we hope to see being approved in the near future, where Wall Street gets access to staking. And the reason staking is important is on blockchains like Solana, but others as well, which use a proof of stake mechanism. The staking mechanism has an inherent inflationary cost. So what this means is that if you're not staking, your tokens are losing value to inflation constantly. So by enabling staking, those investors are able to not just get the underlying appreciation of the cryptocurrency and the ecosystem as it grows, but protect themselves against that inflation and capture that yield as well.
Now, last question is just on revenue. Revenue accelerated from about 4.9 million to over 10 million in less than 6 months. I'm not sure if that's in US or Canadian, but you can let me know. But I guess my question is, what is your playbook to kind of keep that growth momentum up when again, we're looking at revenue strictly?
Absolutely. I believe it would be Canadian, but to be honest, I'd have to check with our CFO. But broadly speaking, the way we look at revenue is, at the moment, our revenue is almost 50-50 from our treasury and from our validator operations. And that's very important. So holding SOL in a treasury and staking it means we generate somewhere between 8 to 9% in additional SOL on that every year from staking yield. That's great. But through our validator operations, we can generate additional SOL as revenue. So we are constantly accumulating more SOL and growing our treasury, which is very important. Now, beyond that, the way that we're looking at growing our revenue is by expanding our staking operations and our products that we offer within that space, but also employing advanced treasury strategies. So looking at how can we improve the yield on our existing treasury by participating in DeFi protocols. So these are areas that we're exploring, and some of these things are very exciting and individually very easy to do, but as a company in the public markets, something we have to convince our auditors of and be sure of whether it's safe for our shareholders to be, for us to be engaging in these protocols. So we're very careful to, look at where we're deploying any capital and making sure that it is safe. But we're looking at essentially growing our revenue through growing our treasury, growing our validator operations and the stake under delegation, that 3.7 million SOL number, and then improving the yield on our existing treasury.
Well, Michael, thank you for being here, for sharing everything so far.
Absolutely.
That's Michael Hubbard, Chief Strategy Officer at Sol Strategies. Everything you need to learn more about the company is below, and we'll see you in the next video.